I'm Sandy Shervanack, creator of Grow Your Money, and I'm here to talk to you about credit. I'm sure you've heard of credit, but what exactly is it and how does it affect you? This video will give a brief overview of what credit is, what a credit score is, why they're important, and ways you can improve your credit score. First, what is credit? Credit is the ability to borrow money with the understanding that you'll pay it back later. It can come in the form of credit cards, student loans, payday advances, or a mortgage, which is basically just a house loan, to name a few. Since the person lending you money is offering you a service, they usually charge a fee called interest. You generally want to pay attention to the fee before you get a loan because these fees are usually a percentage of what you borrow, which can really add up. But we'll cover that in much more detail in another video. Just like getting credit in class means you've earned the privilege of passing, having good credit means that banks trust you and will lend you more money. Banks keep track of how likely it is that you'll pay your loan back on time with something called a credit score. It is a public record that you or any agency can look up with your permission. Credit scores range from really unreliable at 300 to super reliable at 800. You won't have much of a score if you've never had credit card or gotten a loan, so the best way to start building credit is to get a credit card and pay the whole bill on time every month. So who cares about good credit? Well, you should. If you're like me, you don't have the money in your bank account to buy a new car, pay for college, or buy a house. Good credit makes it more likely that banks will lend you money for these things. The better your credit, the more money you can borrow. So there are a number of things that affect your credit score, but here is some of the most important. As you can see, your payment history, or paying your bills on time, has the largest impact on your credit score. Next is your credit use, or how much of your available credit you use. The next most important category is your credit history, or the length of time you've been building credit. That's why I'm telling you this now, so you can start building credit now and get a head start in this category. Credit mix refers to having multiple types of credit accounts, like a credit card, student loans, and a car loan. While it's good to have a mix, only get loans you know you can pay off. Finally, new credit refers to how many new credit cards or loans you've gotten recently. Now give yourself a chance to see what you've learned. Pause this video and match the term on the left to its definition on the right.